This is London with MarketHedge. Let's pay attention to Bitcoin. New pattern in play. Now, your trades on that last signal that I brought to you in terms of the 4-hourly low RSI have paid. You guys are up now from 83K to, let's call it 87K. In terms of the amplitude move of this ascending triangle, moving this to the upside, assuming we could get a break over the 93, it is a breakout move. We're looking at 105,000 for a potential target to the upside. Don't let the bears completely have you just looking down at price action, especially and if to the extent that we can get up. We would prefer in a New York session with some nice volatility and our eyes on the trade to be able to trade that move up and over the 93 would be fantastic. As I talk about trades, let's talk about one thing. As I look at Bitcoin right now, first of all, we can discuss the 4-hourly low RSI. We hit into it and we got a nice hit, nice rebound. That preceding video worked out well. If you're trading, shout out. Hey, congratulations, you're making money. And I want to shout out to JMac in the back. Nice to see you trading. VIP Strong in the back, killing it. Nice to see you caught that low here. Now, in terms of the tactic or the technique, we're going to discuss exactly this green line, that 4-hourly low RSI. I've applied it on the price chart. And this is the line that I trade. So as you're looking at this, yes, I stack orders, as you guys know, underneath. And we stack these automatically with BTCC accounts. Longest standing crypto exchange, never been hacked. Coolest guys around. Appreciate you guys and all your development work we've done with MarketHedge. It's turning out to be a fantastic project. As we look at the stacked orders, see that these longs paid on the recoup. You've got it, right? Every long stacked pays. We carry down the longs and we release them back at this specific green line. If that is trade number one, let's look at trade number two. Absolutely. In terms of the secondary trade, which I'm going to count as the breach of the specific 4-hourly low RSI again, meaning if we check out that line, when did we go back into oversold turf? Right here. Bam. Now, what happened? We stacked longs and bam, we got a full recovery to this level, meaning long number 1, 2, 3, 4, 5 in the money. Very nicely done. If I go to that next instance where the bears accomplished an oversold metric and we stack orders again, I've got that 1, 2, 3, about 3 to 4 trades again. They're going to pick up and be in the money, meaning they recoup right to that original entry spot, and this was the one to hold on. It actually caught that daily low RSI, and we're up and out from that specific 80, call it 83, 84,000 up to the current 87,000. So that is our approach. It's my approach. And remember, former hedge fund owner, private non-SEC, not financial advice. This specific action can create a lot of returns. I recommend that you take a look at it and spend 10 minutes looking at the potential returns along this line. Most traders will do what? Most traders will get in, say, I'm long. That's it, London. I'm long. We're oversold. I want to rebound to the upside. And what happens this whole time? When they're looking at the guys, when they're looking at their trades here, they are going to typically put in a stop loss, and they've only got so much, guys, water they can get out of the boat in terms of a stop loss, right? So when they're down here at the 83, 84,000, and they got in at the 87,000, they're getting pushed around, getting shoved around. That's why we hedge, right? We hold back some of our margin. You got it. We let it come to us, and we're looking for that rebound at each stack of orders that we deploy. So instead of just looking straight up and saying, I'm willing to lose whatever this amount of money could be, we're stacking at each level and trading up to 10 accounts at the same time. It is really, really, guys, an aggressive way to focus on accelerated profits, right? Accelerated profits. And that means we're also trying to accelerate risk in the equation. Let's discuss a few different issues right now. It's going to be on the daily. In terms of a hurdle to the upside, we'll discuss the 20 moving average on the daily is the specific, I'm going to say the closest in time and guys in space here as we look at the specific. I want to call out this specific level of resistance as well, depending upon where we look or where we hit and what this price action does in the meantime. The 90,363 is going to be that 20 moving average on the daily, and I'll say it is it's the key hurdle. We brought it up last week. We couldn't get over it. The bulls failed. It was a great short, by the way, but looking at the preceding pivot as well, depending upon how long we take down here and the level at which that 20 moving average drops, this may be as significant of a line. Okay, connect your two specific pivots, the one at 107.3 and the specific 92.3. Connect these pivots and just be aware of that daily 20 moving average and that specific trend line, which we've got to get up and over if we expect to make progress to the upside. Now, we do have a macro trend channel to the downside. I would recommend you look at that on your 4-hourly or your 6-hourly. Connect the level of support, your level of resistance up across the top here. We failed to get to that level of resistance precedingly, so we are in that crunch mode. So again, that 20 moving average daily or that other specific line that we drew out, that trend line here will be your guide. Now, looking at the 4-hourly, let's look at the 4-hourly MACD. Trying to pop to the upside, that would be of benefit. We've got to get up and over the 20 moving average as well. On the 4-hourly, clearly, at least that histogram rolling to the green side would be a signal within it itself, guys. Looking for the recovery on the micro, if we were to look for something reasonably close to the upside, and this is just a classic technique, you guys know, a preceding level of support. You see this nice double bottom here. That's a target, the 90,170. We'll call it 90,175 is an immediate target to the upside. So all eyes to the upside with the caveats that we've got this 88,000 on the 4-hourly. That's the first hurdle. We need to roll green on the histogram as well on that lower time frame being the 4-hourly, and we've covered the daily. So in terms of downside potential, don't let yourself fall apart in the market. Always, always maintain heavy cash reserves. The only people I know that are getting hurt in the market are the ones without the heavy cash reserves. So if you've got that solved, all right, you've got, guys, you're ahead of 99% of the market. So just a little bit of discipline goes a long way. Just wanted to bring you the update, particularly in terms of the ascending triangle. That's a new feature, assuming bulls can hold this line, and we can count it as a pivot, another pivot. These have been very difficult and have not traded well on Bitcoin as we've been going to the downside. You see an ascending triangle. Some people are running the other direction, but I'll just tell you that they have the capacity to move and act as a floor. We've seen a few different times in the past of Bitcoin that these have acted as a floor. So before we give up at all, let's look at that clearing the hurdle on the 20 moving average on the daily as just the primary focus for the bulls to try and reestablish at least one metric for a bull trend being over that 20. And guys, this is London with MarketHedge. Shout out to all the VIP, to Luke, to Daniel. Shout out to J-Mac, of course. Nice to see you trading in the back. And shout out to our trading partners, BTCC. Longest standing crypto exchange, never been hacked. That's the bottom line, guys. This is London, guys. Pleasure to bring a TA update. Thanks for spending a few minutes with me. We'll talk to you soon. Take care. Bye-bye.